Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct for Dukascopy TV. While many of us are still contemplating what Q4 may hold for the Australian market, my next guest is a man who's already considering 2017 and he says it's going to be a good year. My next guest is Mathan Somasundaram of Baillieu Holst and he spoke to me ahead of the China GDP figures. Mathan, welcome back to Dukascopy TV. It's a pleasure to see you again.
Nice to be on TV.
No problem at all. Okay, so with the US Fed rate hike now largely unlikely to take place this year, and also China, we're expecting to receive sort of a greater blueprint on that economy moving forward. How is this shaping your expectations for the fourth quarter?
Yeah, it's going to be interesting because I think the US Fed rising rates in December has dropped from about 70% in August now down to 30%. And that's declining by the day. So if you go into Q1, generally the last couple of years, Q1's been pretty weak. So if that happens, then you're looking at Q2. So it could get pushed back a fair way. So the question would be, do they want to do one anyway and then just get it out of the way and then slow it down? I think that's probably smart for them because if they don't, they get locked in. But either way, I just don't see it going up too fast. I think it's going to be a prolonged period of time. So I think that's what the market is beginning to realize, irrespective of when they move, the normalization process is going to be prolonged. So in that context, I think the markets are getting a bit more optimistic. With China, we should get some data today, kind of sets the benchmark of where they are. And any number on GDP growth below 7% would be, I suppose it's like a dual personality. The market could take it as, well, that's going to mean positive news on the plan. They're going to do a lot more stimulus. Or it could say, oh dear, we're going to have something low growth. So I think probably initially it will probably be a bit of a panic, but then that'll set the path for what they're going to do because you'd assume the Chinese government already knows the number and they're going to be planning with that. So I'd expect a weak number. Probably it'll be smack bang on 7%. And that should give them enough stimulus plans to come through for the next quarter. So I'd expect the 5-year plan to be quite positive. It's probably not going to push up commodity prices, but I think it'll put a floor on it. So I'd expect for the Aussie market to be pretty positive Q4.
We've seen pretty light volumes with now some of these loose ends being tied up, those uncertainties such as the US, such as China. Are we likely to see greater volumes then in these sort of final few months of the year?
Yeah, I think so. I think pretty much there's too many big plays that's been undecided at the moment. So now that US is more or less relatively clear, China after this week, we should get a bit more clarity on how that's going to go. With the move by Westpac on home loan rates, that's kind of put a bit of a floor on the banking sector, which is 30-40% of our market. And that flowing on has actually put a decent amount of support on our market. So I think a lot of the bad news is already in there. People are getting a bit more optimistic. And rates are looking like they're only going to go down. They're not going to go up in the next couple of years. So if you want a decent return, you have to go to equity markets. So I think the next 2 to 3 months would be quite positive.
So what are you seeing then in terms of that domestic performance? Earlier in the year, we were even talking about that 6,000 level. We sank through the 5,000. Where are you kind of pitching it?
Look, I still think we'll look at 6,000 next year. We had initially about 2-3 years ago, we put in 6,500 for next year. We've downgraded that to 6,100. And we're still quite confident we'll get there because if you look at where the returns are on interest rates and where things are with dividend yield support for our market, I think global markets are waiting for our currency to stabilize. And we've seen it actually bounce off and go back up to 73. I think that's overstretching a bit. It'll come back. But I think the downside risk for the currency is probably limited if China come up with a decent plan. So we might see a downside risk down to the high 60s, and it'll probably stabilize between the high 60 to 70. If that happens, then I'd expect the global investors who were selling from all the way when the currency was $1 down to 70 cents, that trade will reverse because you're still only getting 2-3% anywhere else where you can pick up 6-7% here. So when that reverses, then we will get a ramp up in our markets. And so we will see 6,000 again and we'll probably go past it. Now, will it hold above that? Well, then you need to see growth pick up. And at the moment, most people on a consensus basis don't see that till 2017. So 2016 is going to be predominantly yield-based, and then 2017 you'll start seeing gradual transition from yield into good quality growth stocks. So I think we'll see pretty positive, and I think 16, 17 could be a pretty decent run.
With that in mind then, are you seeing a Santa Claus rally this year? Could we have that, or when are we likely to see signs of a possible Santa Claus rally?
Well, the usual cycle you get for the Aussie market, you get a fair amount of the dividends coming out of the big boys, the banks, Telstra's, Woolies, Wesfarmers at the early stages of October. We had that. We had a bit of a run. And then when the US reporting cycle comes, we have a bit of a panic, which we had, and we have a bit of a pullback. And then generally that's what sets up the Santa rally. So we are pretty much there, and I think the US reporting cycle risk is over to a certain extent. Most of the negative news is out. The interest rate cycle is out. And I think if the Chinese government come up with a decent plan, then all the big picture is positive. On a domestic front, the federal government leadership change has actually turned around a fair amount. The sentiment is improving, and they're looking at a lot of the macro things that we thought were big risk plays for us. They're actually going back and looking at all of those things. So it looks like they're going to be doing a lot of that work. So if they do go down that path, yes, we will have a bit of a lull 2016. But then 17 begins to look like the turnaround story. And markets are very quick at overlooking a one-year downturn if they see the turnaround story. So the fact that we have had a pretty positive government leadership change, and they've been pretty smart about how they approach it, and it's pretty impressive for 1.5 months. They've actually turned around sentiment quite well. If they can hold on to that together, and I think it'll be pretty positive.
Mathan, many thanks for the update.
Not a problem.
Always a pleasure to receive Mathan's insight. That is all we've got time for right now, but I'll be back with plenty more exclusive interviews for you right here from the heart of the APAC region. Goodbye.